Yeah, we build it live. Clock hits the session, links all glow. Nate pulls the chart up, here we go. Kane's got levels on the side of the screen. Chris calls wrists like a laser beam. Candles moving, crowd in the feed. From zero to filled, that's all we need. Zoomed out faces, caffeine eyes. Hands on the wheel while the price line rise. Feel the trade Wednesday, we ride it out live. From the first idea to the exit line. That's the squad on the mic. We don't just talk it, we click it inside. Feel the trade Wednesday, the playbook's open. Every bar, every tick, we're locked in focus. You can see the whole plan, every step we take. This is where the crowd learns how the pros build trades. First we frame the move, Nate marks that zone. Kane checks trend, are we with it or not? Yeah, Chris runs numbers like stones in a jar. Size that fits, then we push it to start. Chat those questions, they answer in flow. Why here, why now, why not let it go? Cursor hovers, heartbeat sinks, they see what we see, every thought, every blink. Feel the trade Wednesday, we ride it out live. From the first idea to the exit line. That's the squad on the mic. We don't just talk it, we click it inside. Feel the trade Wednesday, the playbook's open. Every bar, every tick, we're locked in focus. You can see the whole plan, every step we take. This is where the crowd learns how the pros build trades. Step one, find the edge. Step two, set the line. Step three, plan the exit. Hit confirm when it's time. From watch list scratch to a live field ticket. They map that path so the whole feed gets it. Each Wednesday, same time, same stage. New idea, new setup, same big way. Come on. Same big way. Yeah. Same big wave.
Good afternoon, everyone. Welcome to the closing playbook for Wednesday, March 18th. Happy Home Day and Build a Trade Wednesday. I don't really have a different voice for the Build a Trade Wednesday part. I got to figure that out. But we have with us the all-stars of closing playbook, Kane Shea and Nathan Tucci, and I believe we will have the builder himself, Chris Pulver, joining us momentarily.
You need to get a
How is everyone doing?
giant teddy bear voice for Build a Trade.
I have to figure that one out.
whatever that is definitely what you need.
I'll wear my furry costume or whatever for it.
Yeah. Well, how's everyone doing? Another fairly ugly day out there, although, the downside 1% is kind of becoming a normal downside move with the elevated volatility. So I don't know if it's, as ugly as it was in relative terms not too long ago, but, definitely moving down nonetheless. This is where we're looking to close the day. Everything pretty much in lockstep here, as you can see. SPY, the Qs, small caps, Mag 7, RSP down over 1%. Gold really taking a pretty decent hit right now to the downside. I think, now that we've got this flipped expectations of rates, gold is going to become really interesting and probably going to be really at a decision point on if that actually happens. If rate hikes actually start happening, gold probably has a pretty big vacuum that it could potentially fill. I still think that's fairly unlikely, but we will obviously see kind of what they project in the next few meetings here. From a sector standpoint, lots of red. I don't think anyone's surprised there. The only thing that's a little bit surprising is that staples have just been getting hammered the last week, which you would expect to hold up a little bit better under these conditions, but they really ripped for a couple of weeks there. Some of the PEs on staple stocks were like higher than Mag 7 stocks, but apparently they didn't want those PEs to stay very high very long because staples have been getting hammered since then. And the only green in sight is energy, which obviously has been consistently moving up since the Iranian conflict. And actually a little bit before that, we got a rotation in there as well. So From the broad view, to me, it still looks like exactly like we said last week, just with a couple green days in between. But it looks like on the longer term, we're rounding to the downside, setting up for maybe a little bit deeper correction on the SPY. You can see it technically now below this box. Got a little stab back up, the retest that we talked about, moving down lower. And on the daily, we are getting closer to that 200, although we have not yet moved all the way below the lows. We're right there, getting close, but it appears to be sniffing that 200 moving average, and maybe licking its chops to get down to there in the next couple of days or next week. So I still think that's the most likely path for the SPY right now, is to at least get down to that 200 level and then make a decision from there. I'm cautiously optimistic that if we get to that level and we get down to a 6 or 7% correction overall, that the market's healthy enough to start recovering from there. And so that's kind of what I would expect the most likely path to be, is a little bit deeper touch here, get to the 200 or so, and then and try to get going again after a true correction, because obviously we went through several months here of like almost correcting 17 times and not actually correcting. So I think that already gave us, a little bit of room for the market to go up, a little bit of cleanup for the market to potentially start, building. And now we have an actual correction, at least starting. We're about 5% of the way there. The 200 would be 6 or 7%. And I think that gets us into the territory of a reasonable connection that I would start to be comfortable buying if we got any confirmation thereof. So what do you guys think?
What do you think,
Well,
Kane?
one other possibility is that the MA200 it should just rise up and touch, right? Because the MA200 is still
Yep.
upward sloping. So if we get long enough chop, then it'll come up and touch those levels. And then we'll have to see if it breaks through. And given the state of the world and as it is, I think the probability of it breaking down below that MA200 is reasonably high. And a correction at this stage in the market is not unheard of or unreasonable at all.
I agree. What's interesting is the CFD. I'll share my screen real quick here, boys. So the CFD SPX 500 did test with that one. I don't. I mean, what was this trade, by the way? We had intraday price action. This would have been. So this is the 24-hour CFD essentially. It did test on that Monday open when we had that big gap lower, and then
Yep.
price was surging higher that Monday for that huge gap up. We just come down and test it. But if you're looking at the opening bell, closing bell, just like you guys are talking about, it's right here within just a whisker of those lows. Look left, and I'm. It's kind of exhausting talking about this, but the 200-day moving average compared to the October 20th or the October 10th, November 20th lows. I guess I want to ask you guys this: is this the finally the bend that gets us a poke of this support and the market is excited to buy that? Or is this where we've held up all this correction and things haven't really gotten out of hand, only to see it, break, stall, and then potentially flush lower? Nate, you've still been, pretty bullish while watching this rotation. The one thing I have drawn a little concern with is the market breadth. We have had a complete deterioration of market breadth in the last probably just a couple of weeks. I mean, when this year first started and this rotation trade happened, it was nice to see that, okay, energy's up, staples is up, everything's rotating out of the top 10 stocks. And here we are, not really falling. There's still like a support structure to the S&P and the NASDAQ. But fast forward to now, I mean, we only have 33% of stocks in the S&P above the 50-day moving average. We are sitting at the cusp of, this is 50% above the 200-day moving average. We very quickly can go where all of a sudden more than half the stocks in the S&P are below the 200-day moving average. That's a pretty big sign of a sell zone. More than 55% of the stocks in the NASDAQ are below the 200-day moving average. That's a pretty good sign of a sell zone. I do think, that 200-day moving average is going to be a pretty critical spot between that and those previous lows we had in October, November. If that level breaks, I think then we have like the real feel of a correction, even though it might be a short-term dip to buy. But I don't know, just thoughts on that as far as those technicals and the market breadth.
Yeah, I mean, definitely to me, the most concerning thing, I would agree, especially when we got some of those, big plunges last week and the RSP was actually down more than the SPY.
Mhm.
I thought, oh wow, this is a wholesale participation in downside fear
Right.
and liquidity being yanked out of the market. So I do agree. I think that's the most concerning thing. I think I would still be cautiously optimistic if we could settle down on that 200 and hang out there for a couple days. That I would say, okay, got the correction we finally needed. It came down, 6 or 7%, not massive, but maybe that's enough after rotating and the PE's coming down legitimately on some of the big mega cap stocks. I would be cautiously optimistic, but I wouldn't be ready to buy. I think we have to, after seeing what we've seen the last couple of months, I would have to see some confirmation to be your classic buy the dipper. I think at this point, just because it's headline driven, there is still so much room for the downside because of the vacuum we've created between April of last year and the current highs, and for all of those reasons, I would be more careful than I might otherwise be under the same circumstances. But I would be, you know, hopeful that, hey, that we needed just a very fine, reasonable correction. We already got the sideways chop in the rotation, and the market has enough energy now to get going again.
Right.
Yeah. Also
Intraday
be
highs.
looking at
I'm sorry,
lot of-
VIX just hit intraday highs. 24 and change on VIX right now as the market's kind of limping into the close.
Reminder, we
Yeah.
have Micron and Alibaba earnings.
Yeah, I was looking at Micron.
It's already up, isn't it? I
Yeah,
thought.
well, it's up every day, isn't it?
Yeah.
That thing is insane.
I'm trying to short it, man. I got to fade on Micron. I'm trying to get filled.
Oh wow, you're a bold man.
Let me see what it is. I'll talk about that in a second. Kane, go ahead. Sorry, I didn't mean to interrupt.
Oh no, just so right now at this point in time, you've got to get clear on what's a speculative stock and what is a staple. So Nate started out saying, surprisingly, these staple stocks are getting hit pretty hard as well. But on the other end of it is we normally think of tech as the speculative stocks, and it has been for a really long time. But if we're looking at this year, Mag 7 hasn't been leading, and the tech stocks haven't been leading. Those aren't they are speculative, but they're not the focus of speculation in this market. What it has been in the last year or so has been nuclear, uranium, metals. Those have been your speculative stocks. And in a weird way, it's sort of like utilities and industrials, a blend of that. So I would be looking right now, is uranium, is lithium, is that still healthy? Are the metals still healthy? For now, it looks like it's okay. But if we get a breakdown of that, that tells me that the speculation in the market is really leaving. And then you'll see it in the tech and then in all the other places.
Yeah, and the other sector that hasn't, it never went like fully risk on or risk off, I would say, is healthcare.
Right.
But now it's really breaking down through the 200 moving average, and it looks very similar to how it looked right around election time when it plunged all the way into the low 120s. So not a pretty look on XLV.
I think it's like rotation meets rotation. That's kind of what it feels like. Everything that was up really quickly. I mean, outside of energy staying where it is, I mean, financials have been hit pretty hard, very hard. In fact, Goldman Sachs down over 20%. JP Morgan, same thing. Financials down hard. Healthcare, stellar sector and failed hard of that 160 handle. What's that percentage drawdown? We're down about 8% in healthcare. What I am not loving about just watching my P&L every single day is I have exposure, and a lot of my option trades and puts and ratio spreads and everything are way out of the money. But obviously having that exposure and having that beta weighted delta does show me some red on a day like today. It's like I'm down percentage wise. Let me see. I'll do the math. Probably just over 1%. I'm down 1.4% today.
Oh,
so
wow, Chris. So you're saying
I'm getting
the word
hammered.
leverage only down 1%. I think I'm down like 4.5% today.
yeah.
So
Yeah.
I mean,
but I've seen a lot of this. It's like I've seen a down day like this is like I'm down 1.5%. But then as soon as we have like a push up and a 1 day pop in the 0DT, I'm back up 1.5, 2%. Like I just have a lot of back and forth. I've just kind of grown accustomed to seeing like honestly, until the VIX like breaks 20 and goes lower, I'm probably just going to sit with just kind of riding out some of these trades with the time on my side, but also hoping that, of course, like the major structure, a lot of my levels, let's say, I would be willing to take some heat in some ownership of things if they're 50% lower. Individual stocks at 50% discounts. I just did one today on Amex, American Express, and on MasterCard. It'd be like 54 to 55% discounts if I were to take any ownership. I mean, I know right now it's like everything in the financial space is pretty rough. They're talking about the threat of consumers, blah, blah, blah. But would I own it at 55% lower for cash flow with like everyone is going to use credit cards? Probably. I think the only thing that would really crush them is if we somehow pass, which I don't think we could, if we passed a 10% credit limit on the APY financing or APR financing. I feel like that would be the worst thing for them, because that would also be a tightening of liquidity and a tightening of lending standards for those companies. But anyway, point is, I just, a lot of it's time. It's like I just got filled today on a waterfall strategy 2 that I've been sitting in for 20, 30 days pending and just filled. And I'm just going to kind of ride some of this stuff out and let the ebbs and flows happen. But I'm not ignoring the potential risk in this market. I feel like we have AAI sentiment still in the 40s. Kane, you've mentioned this before, the NAAIM, like that's reduced to like 65 or 67. That's way off. We're sitting on, I just saw this. I just took a picture of this. The current misery index is way off for like the stagflation fears. I thought that was interesting. I saw this on Twitter. It was something about the exposure, like the net exposure and net exposure for households is still pretty high. I think there's equal reasons to be concerned, equal reasons to think this is a little bit overblown. The market will figure it all out. I just think that all we can do is like help people navigate. We're trying to do it ourselves, help people navigate through this. Just take good defined risk trades. Don't let some type of outlier event, bust up your year. I think if you take any losses, it's just calculated risk. I think that's the best way to survive this year.
Yep.
Yeah, agree. Speaking of calculated risk, I like the U.S. oil short. I know I'm gonna get some hate chats. I like the U.S. oil short. But it's exactly what Chris just said. I'll do it as a defined risk trade. If oil goes to $200 a barrel, I'm not losing any more than if it stays at 120 a barrel right. on that trade. And so to me, the risk reward is the more interesting thing than the actual directional bias. And I would do it with quite a bit of time. I mentioned this in my newsletter. I would do it out to when, midterms are going to be in full force, and the man in the White House is going to be doing everything in his power, in my opinion, to try to push oil down, because his best talking point for his first year in office has been, hey, energy's down, therefore everything else is going to follow suit, which I agree with, by the way, as a fundamental idea that, if you can get that in line, it is the biggest lever. But now that he's lost that lever, I think trying to kind of get it back in control will be of major importance as we move along here. So from a risk reward perspective, and my belief, although I'm not someone who usually takes political based trades, my belief that they will do whatever they can to get oil back down. I think this trade, we talked about this in opening playbook. I think it was October 16th. If you are willing to go below 105, let me make sure that's the one that we did.
Is this a USO trade, Nate?
Yeah.
Okay.
So I think I did 110, 105. Let me check. We set this up yesterday, but oil didn't close above 120. I said if it closed above 120, I would do it. But it's not paying as much today, interestingly. It's only paying about 100% today. It was paying more like 250% yesterday for some reason, which is weird because oil is higher today. Let me see what the 105 100 would pay. Still just a little bit over that 100% number for the 100 105. I don't like that risk reward as much. I'm sorry, I'm just going to flip through and see what it would be if we went to July. Not any better. Okay, guys. Well, I'm not going to take a USO trade. Sorry. Thought I was going to take a USO trade. I am not going to take the USO trade. That was over 200%. The first spike, and it was still like 130 or 140% yesterday. So I thought we'd be back in the 170, 180% ROI potential there for USO, but not getting it right now. So we'll keep an eye on that. Maybe it'll fizzle into a better ROI with just some volatility coming down. I don't know. But on the earnings side, I don't love the Micron, what even doing a calendar, which we've been doing great lately. Because to me, even though I think it's priced reasonably and there's a decent range there, Micron, I think all bets are off for today, just because of everything else surrounding the market conditions right now and where Micron is in relative terms. I would actually rather take the BABA trade than the Micron trade. If you're going with the calendar spread, you get a little bit less range because it has less volatility, maybe about 6 or 7% on the range for break even if you go at the money on BABA. But I think that one has a better chance of kind of just having a quiet, the numbers are fine, they're not amazing, no one's going to care in relation to Micron, quite frankly, for BABA. So I think that one has a much better chance of being underwhelming. And the 135s are like $140. So I'll pop that one in the chat if you want, and then I will shut up so you guys can take a look at anything else.
So here's a trade on Micron. I put it out to a Friday expiration. Let me check. I've got a profit trap run into the end of the day here, fellas. Let me just double check things. I've got a little broken wing butterfly on SPX. Right now, I've got some net credit coming in this butterfly. We got 10 minutes to go. If I can hang out around the 66.30, that's a nice little $5 profit trap. It's pretty slippery here. I only have 10 minutes to go. It's kind of all or nothing. I'll let it just oscillate. My break even is like 66.2450. So I'll watch that. But I was going to say on the Micron trade, I basically built out a trade that gives me a profit trap between 495 and 500. Well, I guess profit trap's $500. So right now the trade is offering about 50 cents credit. I'd be risking $200 to make $50, but I also have a $500 profit trap built into it. So if interested in the trade, it's right around the expected move on the upside. We've already seen a decent jump to the upside. When I took this trade, it's been open for 2 days. And so I got in a little bit early. The upside is kind of pushing that expected move higher. Anyway, I'll just type it in the chat if you're interested. Here's my Micron trade. Micron, it is a 320 expiration, buy 495 call, sell the 500 call, and buy the 507.50 call. I pulled that in for, I did the trade for 25 cents. It's offering right now about 45 to 50 cents credit. And that would be your break-even price at 500. Let's say you get filled for 45 cents. 500.45 is going, actually, no, 505. Sorry, 505.45 is going to be your break-even price. So as long as price is below that by Friday, you'll keep that 50 cents. There's that potential if it hangs out around $495 to $500. There's a little $500 bonus trap in there, which would be pretty sweet. I just posted that in the chat.
Nice. Someone mentioned the spread is a little wide on BABA. Yeah, it's a little wide. I don't care a whole lot if the spread's a little wider because I'm going to use limit order and only pay what I want to pay anyway. So if I get filled, I'll get filled. If not, no big deal. And apparently I paid too much because it filled at 125 immediately, even with the mid price at 130. So there you go. So I don't mind doing that. That gives me a little boost on that ROI actually, compared to what we showed. Looking, to see if Alibaba can just be within a couple percent of the closing price that we get today. Very similar to what we had this morning with Docu. So it wasn't a perfect hit. It didn't land right at 48, but it was within 2% in the morning. We got, a 77% ROI on Docu without being just right. Similar kind of thing here. We don't need to, BABA to be at 0 and hit that 134 number. But if it's at 136, 137, 138 and hangs out there for just a minute, we'll be in that 30 to 40 to 50% ROI. So that's really all we're going for on Alibaba.
Nice. What's the expected move on that, Nate? Alibaba for, you're taking this out to Friday? So I got
I did the calendar, so I did the next two.
Gotcha. 20th and 27th. Okay.
Yeah, it's like a 5% expected move.
Yeah, I'm seeing like $7 on that thing. Okay.
Yeah.
Not bad. All right, cool. I like it. How those calendar spreads for the most part treating you well?
Yeah, we've had a really good run. I did lose one on Adobe last week, and what I always tell people is that I really like trading the calendars on earnings Monday, Tuesday, Wednesday, especially Monday, Tuesday, because you get a couple days for, even if you do blow it out, for it to kind of come back into the wheelhouse. And Adobe, we did it on Thursday, so we didn't have that extra day.
Gotcha. Okay.
You know, and that was the one that we lost. So I'm like, but probably going to end up, you know, kind of making a rule where I'm only going to trade it through Wednesdays on those going forward, just because we have had, I think, 3 or 4 that the initial move was outside the market maker move that all ended up winning within the next, 48 hours.
Nice. Yeah, I would definitely. I like Bob. I mean, I did take that trade on Micron, but it's also well outside the expected move, maybe a round number resistance zone. That'd be a nice little $500 profit trap if we hit it. I did close out. I've got like I said, broke wing butterfly at the close here. I pulled it in for 60 cents credit up front, and I'm showing now 60 cents credit to close. So I'm going to get about 120 bucks on that trade. I'm just going to take it off the table. I could sit here for another 7 minutes and hope it hangs out around 66.30. That's my pinpoint, or my pin price, and that would give me like a $500 trap. But if it slips, $3-4 lower, or goes up $3-5 higher, I get nothing for it. Now it's up for $1 profit. Yeah, it's just the final like 10 minutes in a broken wing, whether it's butterfly spread or broken wing, that's where like all the fancy profit traps happen. It's so crazy how sensitive it is in the final like 10 minutes. But I'll take a profit. I'm out of the trade. All right, Kane, what are you liking, man?
Well, I like well, I don't know if we'll have time to throw something on, but I'll give you guys the overall principle of it, and then we'll see if it could actually be put on.
Okay.
We'll get I like going straight with the SPY. I mean, I think it's moving reasonably predictably in the last couple of weeks. It's been following that EMA 8. We tagged it yesterday, last 3 days, and came down off of it. So I'm comfortable with that as a backstop over the next couple of days, and then maybe a movement downwards. So I would like either a broken wing butterfly like Chris did, or a long put condor to kind of capture this area where we could say like I'd be comfortable with 675-ish down to the MA200 would be the 660-ish. I don't want to do a regular condor because if we break down, it could really, really break down. So let's see let's do the condor. Let's see what a long put condor would look like on SPY. It'd be safer to go out to next week and just close it early. But if you like the thrill and the larger returns, then you would just do this Friday. I said 675-ish. This is probably too high, actually. I don't know if we'll get paid for that. So we'll just say 673. Go 5 apart. And then we said MA200 was about 660.
It could be a good fill, man. Nice little skewed condor.
Yeah, there you go. And a little bit of risk on this downside. Normally I like to get it at least where it's break even, but I think that's close enough. Maybe we could, if we brought this down to 672, we could get it. Yeah, there you go. You'd make at least $3 right there. So let's see if that's actually option strat has good price levels, because it may not. But if we go out to the 20th, and then let's do closing playbook. I am buying 659, selling the 660, selling the 672, and buying the 677. Looks like if I can get a debit anywhere under 3, 4. Okay, so I'll have risk if I get it anywhere under 4. I'll try exactly at 4, see if I can get one of those.
For those of you guys who like the Kane trade, you have 18 minutes, not 3 minutes, just FYI. So you have a little extra time.
Oh yeah, 4:15 on SPY.
Right,
that's true.
Right. Yeah. Yeah. Maybe. I mean, I'll hang out here. I mean, I don't.
Are you trying to get at least $4 so you can eliminate the left side of that risk?
Right. Exactly.
Okay, makes sense.
I mean, $3 of risk isn't terrible, but
Yeah, right.
yeah, I'll bump it up 402, see if that gets filled.
While you guys are waiting on that, what are your thoughts on the metals right now? Especially, not only from a price action standpoint, as we're actually getting some momentum to the downside, but
Yes.
On the rate risk now seemingly kind of shifting gears.
Real quick, what was your last debit on that, Kane? 402, you said?
402, yeah.
So technically, I love the pullback in gold. I have been eyeing this 200-day moving average on the daily time frame for months now. Couple things. I know we're tight on time here, but this is a couple months worth of analysis. Once we had the big push and all the mania and all the crazy gold fever that came in here, this got to 30% overextended from the 200-day moving average, which has not happened ever. The furthest away we've been before that was 2009 to 2011. We had over 600 bars and about 24%, 25% overextended. So, we had the futures market changed the leverage 3 times in 45 days. We kind of shook out all the loose hands. I think this is the perfect little setup to get big money to allocate again and start to get some of that, if anybody is underexposed to gold, a nice way to kind of dollar cost average into it. So I like the idea of, candlestick wise on the daily, if we come back to 4,600, I like that spot. We come back to the lows around 4,400. I love that spot. I love even more 4,200. Once we test the 200-day moving average, I'm a big fan of just dollar cost averaging. Put my 5% allocation, put my 10% allocation. I think that we do have what it takes in the next 1 to 5 years to get back to all-time highs, if not higher. The one thing I say about gold is right now, gold is a bit of a, all roads point to either printing, debasing, loss of purchasing power, store value, central banks wanting physical delivery, physical ownership of gold, some type of store value that's not fiat. And again, I don't want to be like this. It's not the conspiracy style. It's like, this is what the market has been showing us for years. And now it's officially kind of crescendoed into I think this is where big picture's at. You've got central banks net long gold, silver, take it or leave it. But I think if you pump out silver trades for profit, put those profits into gold. I love gold long-term. You can have Jeff Smith. I'm sure. What do you ask Jeff? Jeff's going to say, buy gold today, buy gold tomorrow, buy gold next month, buy gold. Like, Jeff is permanently bullish on gold, and you can't blame the guy. But again, I want a dollar cost average to build my position back up. I love what's happening on gold because I thought technically this has to come back and find this 200-day moving average. And anyway, so that's where I'm looking at is I just have dollar cost average levels. I have some ratio spreads on GLD. I've got some puts. I'm looking to trade GC for futures. I'm looking to do some put condors, but I want to see prices come down to better levels, and I'll start stacking up some income trades. But overall, I'm liking the bullish side once we get to these technical levels.
Yeah, I like those levels a lot. I would have drawn them exactly the same place, and I would look for that first bounce at that 4,600-ish level.
Nice.
On the spot. So I agree wholeheartedly.
Cool. Hey, Kate,
Nice.
just double check that trade I posted. Your screen was kind of small for me, so I want to double check it.
Yeah, it looks good. Yep.
Nice. By the way, one thing we didn't talk about, but maybe we can talk about next time we're around is the chip sector was trying to be the last bastion of risk on upside for a good while. It is obviously not flipped to the downside the way that tech as a whole or the mags or anything have, but it seems like it's starting to build some bearish structure. And I think if chips go, that's where the pullback could get really ugly, because I think and hopefully Mike Ron and others are not a catalyst for that, or else that could go pretty quick. But
Right.
To me, that's the other thing. So it's probably the most important domino, in my opinion, of going from steadily grinding down here with some back and forth down to the 200, a little bit lower, whatever, to okay, no one's even a believer in the upside of, the AI chip world. And if that thing's flushing, then I think it gets quite ugly.
I agree. I just pulled up. So to me, I mean, if it's starting to set up a little bit of a head and shoulders pattern, I'm just measuring a move down to 320. We have the 200-day moving average at 345. I said this kind of same thing. It's like, if you like a trade like SMH, can you get any premium going out maybe 6 to 12 months and selling the sub April 2025 lows, which was down to 175. So I'm just going to look at it right now. I don't need the screen or anything, but if I went SMH out to the end of this year, December 2026. Could I sell something? It's not going to be a ton of premium. I thought it'd be better. Lows around 170. I can get a 178 for $2, man. I mean, it's an income trade. Price would have to fall from all-time highs.
50%. Yeah.
Yeah, we'd have to fall, 50, almost 60% to give it all back. So the question is, will that happen? I don't know. I just had, what the hell was that? I just had something fill for 250. That was weird. Let me see something. SPX. March 31st. Oh, we got a little engineered options, stacked programming butterfly opportunity.
Nice.
Cool. That's so engineered options real quick. That is a 250 risk for a 250 reward, and also packing in a $1,000 profit trap, Nate. Little bonus on you, dude. So
Nice.
1-to-1 with a potential profit trap to make it almost 5-to-1, 4-to-1. That'll be interesting. Now, what does price have to be? Price has to get back above 67.50. Does that happen by the end of the month? Maybe not, but I've got some stacked up trades. We've been doing a lot of grinding, a lot of winning. Despite this market selling off, we still made money. Today, by the way, the market did close for the first time in probably 55 days below my expected move. So technically, the market just limped lower all day, closed outside my expected range. I'm curious what tomorrow brings. VIX is up to 24 plus. Watch your key levels, everyone. Like there's support sitting right there. Watch the 200-day moving average. I think we all kind of see it on the chart. We talked about it. So watch those 200-day moving averages. We've certainly seen some intraday bounces. All it takes is one good 0 DT pop to make some short-term profits, and then we just kind of buckle up and see where the rest of the volatility goes. What else you guys have to wrap things up?
MU earnings came out so far post market at 471. So
Okay.
your butterfly's looking good.
Okay, baby. And that gives me 2 days to push. So let me see. What I'll do is I'll look at this tomorrow morning and check and see where the expected move is at, because right now I believe it's right around that expected move as far as the $500 handle. Let me go out to Micron for Friday. So $500 is right now slightly outside of the expected move, which should be great. And again, that it's not a free lunch, but I'm risking about $200 on the trade to make 50. But if I get the profit trap around that 500 handle from 495 to 505, that's a nice little profit trap that maybe kicks in some bonus profit for us at the end of the week. Yeah, I think that looks good.
Yeah, someone said they crushed earnings. Yeah, everyone knew they would, though. So it's just a matter of
what price is going to do with SMHD.
Yeah,
and also
how excited
down,
they are about that, and what they future guidance and all that. I mean, if they didn't crush earnings after being up 100% since their last earnings report, things would look very, very bad for Micron right now. But everyone knew they'd crush earnings. It's just a matter of to what extent and how excited people are by that. So, but I'll be very curious to see how that ends up, opening up and what the volume looks like on it tomorrow.
Yeah, let's see. As long as I stay on $500, I'm happy, boys.
Yeah, there you go.
Nate, we'll keep an eye on your Baba trade. That looks good. That's a good one for earnings. I think that's the better one to play than Micron, because I was expecting Micron to be, maybe a $30 plus move one way or the other. I think the plus minus by Friday is still like 35 points. So we'll see if there's some juice behind this move. I'm sure it crushed earnings, but again, the markets look a little iffy. We do have some support sitting right underneath of those 200-day moving averages and the indexes, but do we have like just a one-day bid? It has just been slow and steady grinding to the downside. It's still funny to me how bad this feels, and yet the markets are just a couple percent year-to-date low. Like, yes, we've had a 6% correction from all-time highs, but the market's down about 2% year-to-date. That's not a bear market, folks. That's not even a correction. We're not even there yet. So just be prepared for it to get maybe a little bit uglier, perhaps, and maybe that 10%. 10 to 12% gets us back to this level. If we're going to see an instant pop around that 65 handle, that would show that the bulls are kind of interested in at least preserving some support. My concern is just we go down to the 200-day moving average, pop back up to 68, and all of a sudden we have another flush, and that's going to be like the painful feel of end of March or into April, to maybe have like this correction still play out a little bit longer. But again, am I still sharing the stream, by the way?
No.
I'm not. Okay, never mind.
No.
Okay, I just didn't. I'm just talking. Let me share this. I think I pulled this. I think maybe Jeffrey posted this in our Slack channel. Do you guys see this? Somebody did like an AI data pull of like, okay, Gemini versus Grok versus Copilot or Chat GPT, whatever. But they plugged in, gas prices. If this Iran versus US thing escalates, crude oil prices so Brent prices, S&P 500, US GDP, US CPI, consumer sentiment. Basically, I don't know what the end game is here, boys. I don't know what the timeline is. I would think that you can't jawbone this Iran-US conflict for more than maybe 2 to 4 more weeks. After this, like if we go into May without this being more resolved, and I put here at the bottom, if we have oil less than $80, I think we're pretty much seeing a pretty strong de-escalation. But if we have another run back to 100 plus, I think the market's not going to like that at all. So that's my price style of, okay, if oil is back up over $100, I think that's a scary thing for the markets right now. The longer this drags on, this goes out to into April, you can see that just everything looks worse. So, I mean, this is crazy, right? S&P 500, and Gemini says this 95% accuracy with a forecast, but you're looking at 9 to 22% correction by mid-April. So we said this at the very beginning, be prepared for like a 20% tail risk, whatever that looks like. Like we could blow the top off and move up. We could clearly have this downside pullback, but are we going to kitchen sink this thing like last year? Where all of a sudden we're down 20% and it's like jawbone the living crap out of this market to try to get some type of boost. How's this work?
Well, we will have volatility one way or the other. That's my very bold prediction, Chris.
Woo.
Very bold. I'm going out on a limb. You guys heard it here
Nate
first.
Tucci, ladies and gentlemen. You heard it here first.
Okay. So there you go.
Crazy.
Sean, I don't think that's the right conclusion based on what I know.
That's definitely not my
but I'll let
conclusion.
Chris answer. Yeah.
It's definitely not, I mean, because remember, Sean, we have to go down and we have to stay down, right? When are our expirations? End of May, middle of May, June, July. I mean, if the market's down 10, 15, 20% and then reflexively goes back up, we'll be fine. It's like, we know the trades, man. We're risking 400 to make 50 or risking 450 to make 50, risking risking 4 to make 1 with a $1 or, 10 to 15 to $20 profit traps. I said in the beginning, it's like, I'm going to stack up these trades. I'm going to play the game 10% lower, 15% lower. It works. And, historically that's had a 97 to 98% chance of profit. I mean, it's not stay away. It's actually, this is exactly what it's built for. Because if we're going down 10%, I've got a 10% buffer. So the market has to go down 10% for me to have any risk. So I just think that the threshold of being down 10% is not a deal breaker. I mean, if it turns into a 15% correction, if it bounces back up, we're fine. So anyway, if I had expirations into this month or into April, I'd be a little bit more concerned, but we don't. So I'm not that worried about it.
Well, even if you had those expirations into this month or April, I mean, it doesn't mean stop the strategy right now.
Oh, of course, man. I'd keep participating.
Keep on going because on the way up, that you're gonna make it all back. You'll lose 1 or 2 trades maybe, and then
you'll have like 40 in a row that win. That was exactly what last year was. We lost like 2 trades on the way down. The entire drop from Liberation Day from peak to trough of 20+%. I think we had 2 losers because we had taken those trades in November, December, and they expired in February, March. This year, I told everyone from day one, like, let's avoid the weakness window. Let's get out to like May, June, July. And if we have February, March, April weakness, then we can avoid it a little bit. But what was nice is even taking those 2 losses and then having literally every trade from February, March, April, June, July, August, September, October, November, every trade won. That was every week. So, it's the market still has support. And we'll see if it holds. We, like Nate said, we'll have volatility. That is probably the one guarantee you're going to see in 2026 is there's going to be uncertainty and volatility. The way this market feels right now, it feels like it's way worse than a 2% drawdown year to date. It feels like it's way worse than a 6% correction from all-time highs. I do think that like Trump and company are not ignoring the overall market risk here. I don't think that they're going to love seeing a market down 10, 15, 20% because you go into tapping into that wealth effect. Nobody wants to see their portfolios down. Nobody wants to answer to having a war in the Middle East and having, the stock market down 15, 20% because it's financialized. We can't afford to let the market go down like that. We can't. And so they will do everything they can between the Fed with the new Fed chair in a couple months to Trump and company to jawbone the crap out of this thing to maybe even emergency measures, which we've seen in the past, which is why this market continues to have this crazy fight in it where it just won't go down and stay down very long. So just saying, it's just a trade. and we will continue to trade, and we'll figure out how to navigate it. But that's it for me on that. Come on, Sean, you're better than that, dude.
No, yeah, but obviously the idea of waterfall is not. I mean, I think it's important to note is not one-dimensional avoid drops. It's also to, in a very natural way, cost average with a drop,
Right.
so that that 100% historic recovery rate that the stock market thankfully has can be helpful when that happens.
For sure.
Yeah. And you got to know, like in the waterfall income, if you were going to avoid the loser, you're avoiding it 5 months ago, not right now.
Yeah,
so
true.
the time to avoid would have been several months ago.
Yeah. And in addition to that too, it's like, think about, if you guys seen the statistics where if you avoided the market on the worst days, you typically avoid the market on the best days. And so that missing out ends up costing you lots and lots of net gains if you just avoid the worst days, but also miss the best days. That's just part of the game. And so, if everyone could call the exact top and bottom, we never have any stress in the market. It's not that easy. There's always a lot of moving parts, and our job is just to define risk and keep trading. We'll figure out how to survive it. We'll figure out how to make money. We'll have good opportunities here. Look for asymmetry, manage your risk. That's the most important thing you can always do. I'm still sitting on about 45% cash. So I've still got dry powder. I think that's a smart thing to have. I wish I had more, but like I said, a lot of my allocations this year were go out to April 2025 lows, sell premium. I'm sitting on like $400,000 worth of premium right now. It doesn't mean it's all going to be guaranteed, but I'm pretty sure that if I get assigned, owning stuff below April 2025 lows on anything is probably not a bad starting point for any ownership. Just my thoughts. I think I can repair those trades. So good stuff.
Good stuff.
All right. Well, boys, it seems like we just teed up a waterfall income, but I know that's not what I'm talking about.
Well, we also teed up volatility, which I think is what you're talking about. So at least we're hitting on one cylinder.
Yeah, very true. So, okay. I can grab the screen. So, what I wanted to share, and this is, so the trade on Micron is in this service. The last couple of trades I've taken, we had winners on AVGO, winners on actually small loss on Dash. We had winners on Walmart, winners on Carvana, winners on Google. Anyway, the last, I'm trying to think, 5 or 6 trades are all winners. 71.6% win rate. Model portfolio is up almost $41,000 or almost 41,500. And it's just taking advantage of, look, individual stocks, individual trades will give us opportunities. The bigger index and the bigger, broader market is still going to be, like I said, there's a lot of fight left in this market. I think with the structure that we're talking about today. So profits and performance shown are not typical. We make no future earnings claims. And, I take these trades with live capital, every trade and every service that I take. I told Nate this today. I've logged over 1,050 trades since I started with Prosperity Pub just over a year and a half ago. 1,050 trades. And across all of my services, my win rate is over 81%. I have win rates as low as 60%. That's my lowest win rate. I have win rates around 71 to 75%, win rates in the 85%, 90, 94, and 97%. So across all my trades, all my services, live capital, over 1,000 trades logged with over 81% winners. I trade to win, and I trade to find risk. So does that mean I win all my trades? Of course not. There have been losses, and there will continue to be losses. That's the name of trading. But what we're looking at here is we're looking at a 72% win rate with an average return of 25%, including winners and losers. Average hold time is just a couple of days, 1 to 5 days. We can't guarantee any specific future results. There's always risk in trading, as you know. You want to check out our terms, conditions, disclaimers, check it out on our Trading Pub homepage. This is trading. There will be winners and losers. You're going to be a better trader. I promise you this. You'll be a better trader when you learn how to lose gracefully. It's not fun to lose. I hate losing. I'm very competitive, but I also know that it is a much better trade for me to take a loss that is risk defined that I know I was comfortable taking in the very beginning than trying to never, ever